What up, guys? It's January 23rd, and let's go over this market today, which was green all around. Hopefully you had all green all over your accounts today. These are the kind of days that you want to be invested. This is the reason we don't sit on the sidelines, so we can be invested and take advantage of days like this and just exhale after just such a horrendous year in stocks. All right, now before we get started, please hit that like button, hit subscribe. Hopefully you learned something from these videos and we have some fun. In the meantime, by the way, happy National Pie Day. That's why I have this little pie down here. I'm like, what the heck is that? National Pie Day. So go enjoy some pie if you haven't already and celebrate the day. Okay, let's get started. So here we got the numbers for today. We'll start with the Dow Jones up 0.75%, up 254 points. It's been suffering lately and it's been an underperformer. As you guys can see, S&P up 1.19%, holding that over 4,000 level. That's very important to see. If we keep holding above the S&P, above 4,000, I think we can go significantly higher, maybe to 4,200 in the S&P. That'll be a nice significant move for us investors of the S&P. And then NASDAQ outperformer today, number one, 2% on the day. Fantastic. Remember, guys, that's tech. So it means tech leading the day, gets the check mark for today. And then the Russell, 1.25% to 1890. We have the VIX still under 20. Again, not a spot in which you want to deploy cash with the VIX under 20. We want to wait for those higher volatility times to get cash into the markets. Of course, when the VIX stays down, it leaves more of an open window for all these guys to run, and that's what they did. That's what they did today. Okay. Now with bond yields and rates, I added here just a little bit of different layout here. The 2-year bond yield in respect to the 10-year bond yield, that shows you the what's called the yield curve, right? And it's right now it's inverted. That's what it shows here, inverted yield curve. So that means that the 2-year bond yield is paying you more than the 10-year. It shouldn't be that way. That's the recessionary sort of signal. And of course, it doesn't mean that a recession is going to happen. People say out there that the yield curve has predicted 12 out of the last 6 recessions. So not entirely accurate, but important to know that the yield curve is inverted as far as an investing strategy. I would gather that you want to invest when it's inverted rather than when it's not, to make the best out of it. So when it de-inverts or it changes course and it's no longer inverted, you can make the best and your portfolio sees the benefit of it, right? Now with energy, we got 81.64 WTI. Last time we talked, it was at 80, so higher on energy, both on WTI and Brent oil. Brent, again, is the European oil index, up a little bit higher here. Natural gas still going down. 363 as of the last video. Today, 341 for natural gas. That's pretty impressive. It's a pretty devastating fall for natural gas. If you ask me, Europeans breathe a sigh of relief with natural gas being now back into the cheap category. Okay, now strength of the US dollar down again, 102.40 as of last time we spoke, and then 101.88 today. That's excellent. That's good for companies that do business overseas. And then we're focusing, or at least the market's focusing, on earnings season week 1, whether the bull market has really returned, right? We don't really know for sure if it's what's called a head fake, meaning it's a significant increase in the Dow, S&P, NASDAQ, and all of a sudden just goes down tremendously. Okay, let's pull up a chart real quick and talk about what a head fake is. And here we have, of course, a chart of the S&P 500 showing a year-to-date, not year-to-date, excuse me, a 1-year chart of the S&P 500. And a head fake is essentially this right here. That's what a head fake is, right? These little spikes that kind of give you hope and get you back to zero or even lower. So this here would be a head fake, of course, and the market is saying, hey, is this here where we are? Is this just one of these guys, one of these? Is that what we're looking at as far as a head fake? So be careful that the market still hasn't decided what it is, but things are getting better. So that's what we kind of do as investors. We analyze where stocks are going, not where they've been, where the economy's going, not where it's been, and what the Fed is going to do, not what it did before. We look forward, not backward, okay? So nobody knows what's going to happen, of course, but me, as far as what I'm looking at is I'm not looking to add any exposure to the markets unless we hit these levels, right? Unless we hit these oversold levels back in October actually, and June, July. So if we're not here, at least I'm not considering buying much of anything at all or adding any significant exposure, right? But if we do go higher, we actually do something like this and we start going higher, then I'll look at more support levels like this here to see if we hit those levels to keep adding exposure to our portfolio. If not, we'll just let it ride and we'll take profits when appropriate. Now, and I think this is kind of cool. I added this little section here. So in my Fidelity portfolio, 3,410 is today's change, 3.69 performance in our big dog kind of portfolio. I also have another portfolio, which is my 401k portfolio. That one's kind of just like a side project for me. And then 9,293, 11%, almost 12% up the last in the last month in our big dog portfolio. Right now, let's move on to Logitech. We talked about this last time we did our video. I think it was yesterday? Yeah, yesterday. Yesterday we did our video, and Logitech reported earnings this afternoon. And why do we care? Because we own Corsair Gaming. That's a stock that is a competitor, sort of a competitor to Logitech. Logitech is more sort of office peripherals, mouses, keyboards, cameras, right? I'm sure everybody's seen those little Logitech cameras that go on top of the, the monitors. That's what Logitech is. It's mainly business, office. They do have a gaming component, of course, streaming component, but I think they're better known for their office sort of business, segment, of course. Now, Corsair is just gaming and streaming, right? That's pretty much what it is. There's no office component to it. It's gaming and streaming with peripherals, cameras. For example, I'm talking to you from the Elgato face cam right now. It's a pretty good image. I love it. So let's keep talking about that. Now, Logitech reported earnings here this afternoon, and they reported an earnings miss, double miss, and a guidance sort of maintained, sort of. Okay, they missed by 1 penny, which is not bad. It's just a slight miss. A miss revenue by $50 million. I think that's also a slight miss for a company that's a $9 billion company, or a market cap of $9 billion. I don't see this as a big miss. So essentially, it's not as bad as feared. NABF, not as bad as feared for the market. So we see here Logitech up on the day 3% after missing earnings. Okay, this is what we want to see as investors. Companies that report quarters that are not as bad as feared, they go up on the news because most of the bad news was already baked into the stock. So that is the example with Logitech. Another example I want to give you is the valuation of Logitech, which trades at a forward P of 14 versus Corsair, which trades at a forward PE of 11. So Corsair is a cheaper stock, slightly cheaper stock than Logitech. So when Corsair reports their earnings and they report maybe a slight earnings miss, we can expect the same thing. Okay, but however, as Corsair runs higher, like it did here today, right? It ran significantly higher. We have to weigh whether everything that's bad is baked in. Remember, as a stock goes higher, it gets more risky. As the stock gets lower, it gets less risky. Okay, so we measure that and we see what's baked in or baked out of a stock price. Hopefully you understand that. Now, real quick, this is the portfolio. This is what worked today for our stock portfolio. And we see that AMD and Marvell chip stocks outperformed the day. We got a big upgrade today from Barclays. Let me bring that up for you guys. Let me show you the upgrade today. And here we go. Here's a Seeking Alpha article today saying Barclays upgrades stocks like AMD, Qualcomm, and Seagate. And they're essentially back to being more positive on the entire chip sector. And remember, if you're a semiconductor investor like me and you have several positions, we have 3 positions in our portfolio. That's AMD, Marvell Technology, and NXPI, or NXP Semiconductor for automotive. So here they're saying it would have been nice to see if the group got as cheap as we have seen it in other downturns, but we underestimated the amount of money that wanted to move into semis, and we don't see the group testing October lows. And if you remember, I just showed you that here. These are the October lows right over here. And let me highlight that for you. The October lows right over here. They're saying we don't see them retesting those lows, which is good to see. Okay, now there's other upgrades and other considerations here. So essentially, they're looking in overall, they're looking at cloud outperformance. That's Marvell, that's AMD. They're also looking at artificial intelligence AMD. They do mention that automotive is still a little bit soft. That's NXP Semiconductor, but NXP Semiconductor is a very long-term investment for a portfolio because we do believe in the automotive story with the adoption and of electrification, right, of electric vehicles. So that is a sneaky electric vehicle play, NXP Semiconductor. We won't let go of that position in a long time, okay? Now moving on, we talked about AMD and Marvell with today's upgrade by Barclays. Teladoc is a risk-on play. Okay, so we own Teladoc because we do believe in the story. We believe in the devices, the data. We believe in the telehealth. We believe in their psychologic sort of what's called BetterHelp.com for seeing a psychologist over telemedicine, a lot more effective and probably not as uncomfortable as having to go somewhere and actually talk to somebody. So BetterHelp.com, owned by Teladoc, of course, but this is a risk on play because of valuation and because, of course, the ownership of ARK Invest into Teladoc. Anything that ARK touches is considered high risk, okay? But nice move today, 565, definitely will take it, okay? Corsair, we just talked about. Palantir, 5% up on the day. That's nice to see, 738. Our cost basis is around $10. It's pretty close to $10. Never letting go of the stock until it hits $100 billion valuation, okay? So with Palantir, it's a long-term thing, okay? But we're not letting it go until it hits $100 billion valuation, and it will. It will hit that, okay? Just a matter of a couple years until it hits that and they can show profitability. If you're a Palantir shareholder, let me just tell you this, okay? I'm not one of these bandwagon guys. I hopped on this day one, but with realistic expectations. I wasn't expecting the stock to go to 40 when these guys, the Wall Street Bets guys, got involved. Wasn't expecting that to go to 40, 50, 60 like that, right? What I did expect is a sharp upturn when the Wall Street Bets guys got involved. It went back down, brought back to earth or on the 20s, and people started playing with it. Those people got tremendously hurt. Those who bought in the 20s and in the high teens, then it came back to earth to a reasonable valuation for a company that is not profitable yet. But once it starts showing profits, watch out. Okay, now DraftKings, that's another risk on play, but there's a lot of expansion in that gaming business. We like that a lot. Rocket is sort of an interest rate play at this point for me. Interest rates being high, that's the time you want to buy Rocket Mortgage, guys. When interest rates are high, when the company has taken a severe beatdown from their IPO price. I mean, these guys IPO'd at, I think it was $18 a share, the IPO'd. Right now, selling at a 50% discount to their IPO price. Once rates come back down, the housing market becomes healthy, these guys are going to go back to 20, 25 easy. So not worried about Rocket Mortgage, and the valuation is dirt cheap. This is a dirt cheap stock as far as the valuation, okay? And then, of course, here's SmartRent. That's our newest position, smallest of the group. It hit that 3 mark today. It backed off after market, but it hit that 3 mark today. Very happy with SmartRent. I think that these guys have a growth outlook for years to come and a big book of business, big book of business that they still even haven't fulfilled yet, okay? And, of course, Ford, we have some problems with unions, rollout of EVs. I can't wait to hear what Ford is going to tell us on their earnings report coming up, okay? NXPI, we just talked about that. That's our sneaky EV play. Disney, we made a mistake, okay? I'll tell you guys this clearly. We made a mistake when we switched Wynn Resorts for Disney because we had no faith in the Chinese government and their willingness to do something good with their vaccines or their lockdowns, right? Or to play nice in a world stage. That, of course, has reversed after they got a ton of backlash. We didn't see that coming. That's our bad. But we still have faith in Disney, in the franchises, in their IP. We like Disney Plus. So we believe that this is definitely going to do better over the years. Bob Iger back at the helm. This proxy fight they got with this Peltz guy, I say let him on the board, right? It can't hurt to do a couple of changes on the board for the positive. I say let him on the board, guys, okay? And then these guys, not worth talking about at the moment. Tattooed Chef is just a bunch of garbage. Okay, we'll talk about that maybe in another video. Let me know if you want to hear a Tattooed Chef video. I got a lot of things to complain about that stock, but that stock is inconsequential to us at this point, okay? Now, that's it for today. That's all we'll talk about. Please let me know if you guys have any questions or anything. Let me know how it can be helpful to you in investing, in buying stocks, and going through this whole stock market craziness that we go through every day, okay? Peace out.